So here's my usual Ask Covering statement. I will be saying things that might offend people, and I won't be taking any legal action. The presentation outline, a little bit about the mineral exploration business, the decline in discoveries, some technology frontiers, and some future opportunities. So an economic geologist or an exploration geologist is basically the role to go to the field to make an economic mineral discovery that can be developed for the benefit of the shareholders and society. For those of you that have been around as long as I have, you would certainly recognize that this is a very tough and expensive business. In fact, sadly, most geologic teams never have the opportunity to make a major discovery. So therefore, we really are optimists by nature. So what are the odds? If we took 1,000 prospects, perhaps one of them will become a profitable mine. If we took 3,333, only one or two of those would be a giant mine. So it really is a casino. I'm going to use Ivanhoe Mines as a case history. Ivanhoe was formed roughly 20 years ago, and in that time, the company has discovered and developed 11 mines. 7 of these have been virgin discoveries, meaning to say that there was no evidence whatsoever of the commodity that was finally discovered, and this was over 10 countries. So if we calculated the approximate in-ground metal value of some of these deposits, this is measured and indicated only, it comes to something like $1/3 of $1 trillion. I need to update this slide because of the recent developments in the DRC of Kamoa and Kakula. This thing just is really the elephant in the room and just keeps getting bigger and bigger. So what's the reason for these discoveries? Is it serendipity? Is it really good planning? Or is it just plain karma? I think the answer is really simple, and it boils down to these few criteria. The right team in the right place, no bureaucracy, no micromanagement, total management support, and well-funded for a period of at least 5 years. And above all, teamwork is critically important. Any person that tells you he was responsible for a discovery is probably not telling the truth. It's always a team that makes the big discoveries. It's critically important, as is the time frame and support from management, because it takes at least a commitment of at least 5 to 10 years for a company's exploration team to have any chance of being successful. A colleague of mine who works for a major company, his team has been given a brief to find something in 3 years. I wish them luck. So the stock market. It's really the stock market that drives the mineral industry. It's the people who invest, or the company, the equity investors that fund the exploration that leads to discoveries. As we all know, the stock market is very cyclic. There's the boom and bust periods, and this really is a significant problem in the industry. So during the good times, this is when geologists are making a lot of money. There's no end in sight to the opportunities to purchase that house overlooking the Andaman, a nice yacht, a new car, etc., etc. Now that's fine, but following every good time comes the bad time, and this is the cyclicity of our industry. So all of those dreams have literally flown out the window. You're no longer looking at buying a yacht or a Lamborghini, and so your lifestyle has changed dramatically. The toughest time that we've experienced in the exploration business was the period 2013 to 2016. This actually went for nearly 1,200 days. So the blue in the graph is the good times, and the red is the bad times. So if history was to repeat itself, we would be now looking at coming into an unprecedented boom. I believe we were on the way to doing that, but what's happened is that a lot of private equity money got channeled into Bitcoin, pot stocks, and now we've got the Trump trade wars. So I do believe that we are approaching the next boom phase, but it's not going to happen perhaps as quickly as we would have liked. So during the good times, what should the companies do? Firstly, they should pay dividends to the shareholders, because these are the people that raised the capital and they want a return on their investment. They should explore aggressively, If they have a good asset and can sell it at the top of the market, that's also very good for the shareholders. And above all, do not buy assets at the top of the market. During the tough times, what should the companies do? They should focus. They should look at buying opportunities, and particularly joint ventures of distressed assets. And most of all, don't sell the crown jewels at the bottom of the market. So what happens? The big companies do exactly the opposite. And they've been doing this repeatedly, time and time again. So it's what I call the herd mentality. One major company decides they've got so much cash they have to go out and buy something that's trendy. We need to be in oil sands. We need to buy a coal deposit. So they all follow suit. And it's really what I call wealth destruction versus wealth creation. And so on the left is some of the major companies, and on the right is a company that I have tremendous admiration for, which is Randgold. And most of you are aware that recently Randgold and Barrick have joined forces, and it's going to be very interesting to see what the new co looks like under the stewardship of Mark Bristow. So during the period 2016, the big companies all had very significant debt, and it actually totals something like $90+ billion. And the root cause for these debts was, in every case, the company diverted from their major focus. For example, BHP went into US oil shale. Rio Tinto got into Mozambique coal. Anglo-American did a Brazilian iron deal. This was all at the top of the market. They paid ridiculous amounts of money, and hence huge sums were lost. In fact, $96 billion of shareholders' money went down the drain. Now, if you and I embezzled $1 million, we're going to jail. But what happened to the boards and CEOs of these big companies that had lost $96 billion of shareholders' funds? Firstly, the CEOs are grossly overpaid. Many times they're not qualified, they're not technical people, they don't understand the business, and above all, they're not held accountable to their shareholders. This has to change. The first thing that happens when a big company has a financial crisis is to cut the exploration budget. This is incredibly short-sighted because they're actually cutting the lifeline to pipeline of future projects that will carry the company forward in the good times. So most CEOs in the big companies have very little appreciation of what the exploration team does. It's viewed as a cost center, not as a value-added function. And so here's another major problem with the big companies. In 2007, as part of human history, we crossed an incredibly important barrier. We went from a society that was mostly agrarian to a society now that is mostly urban. And this has very important implications for the future of metals. Urbanization is happening as we speak, and if you think about as populations expand in countries like China, India, there's no end in sight to this growth and urbanization. It's a very, very important consideration for the future of metals. This is a slide of Shanghai in 1987 and Shanghai in 2013. What a difference. And this could be a slide of perhaps New Delhi or other very populous centers around the world. But in China particularly, for those of you that visit China, you would see this with your own eyes. So this has got to be great news for copper. As we're all aware, there's a major demand for copper in the electric car industry. And so some people are predicting that by 2027, the demand for electric cars is going to be up something like 900%. And this is, and other EV applications all require copper. Every EV is thought to require at least 50 kilograms of copper. And if you think about the unstoppable trend to changed over to EV cars, the future for copper is absolutely outstanding. Green energy also requires a lot of copper. All the different kinds of electricity storage inventions that are coming up online. China especially is dedicated to green energy, and so this is going to require a lot of copper. I read recently where the Saudis are investing something like $1 billion, the Saudi Wealth Fund, in an EV manufacturer. This tells you something, because if anyone's going to hate the EV sector, it's got to be the oil-producing companies. Here's another slide which shows that it was at a conference a couple of years ago where something like 220 mines that produced around 40% of the world's copper have a finite life and are facing closure in the not-too-distant future. The boss of Rio Tinto a while back made a dramatic statement that we need to find something like Escondida every 15 months to be able to supply the world's future demand for copper. Quite dramatic, but I think it tells us something about the demand for copper. It's not that we don't have copper deposits that are potentially available for development. We do, but for various reasons, many of these, I think, will remain in the ground for some time. Things like high capex development, environmental constraints, geopolitics, and perhaps low grade. So we do need to find high quality copper deposits for future development. Exploration budgets, finally, are beginning to recover. And so post the depressions of before 2016, there's been a trend from 7 billion up to 10 billion in terms of exploration spending. That's good news for the exploration business. And where's that money being spent? More than half of it actually is being spent in the Americas. So people are opting basically for political stability. Copper discoveries are certainly drying up. On this chart, you can see the diminishing discovery rates for copper, significant copper deposits, despite the fact of very significant increased exploration budgets. So there's a major disconnect here, for sure. Future copper discoveries. Perhaps 6 to 8 years ago, most of the copper, or a large number of the copper discoveries, were made by juniors. And that's quite understandable, because it's the juniors who are more aggressive and more nimble in the field to get out and make discoveries. What's obvious, though, in the last couple of years is that the amount of money available for juniors to go out and explore is decreasing. And so it's gone back to the majors who are spending most of the money for greenfields exploration. This isn't necessarily a good or positive thing, because historically it's the juniors who generally find the big deposits. Some of the companies recognize this. Goldcorp, for example, they, instead of spending $100 million of their corporate funds on exploration, they've decided to take equity investments in junior companies. We can see that this is an increasing trend over the last few years, and I think that trend will continue. We've had a major decline in grassroots exploration budgets in the last 20 years. What this graph shows is a decline from 50% of total budgets allocated for greenfields down to 25% in the last 20 years. Now, if this trend continues, this is going to be a significant problem for making new discoveries. Health and safety. There are way too many restrictions in the exploration business for health and safety. There is a very big difference between a mine, which is an industrial site, and an exploration tent in the field. It's absolutely ludicrous to apply the same health and safety policies that exist on a mine to an exploration tent in the jungle. It's really common sense. Exploration geologists are faced with volumes of policy manuals, and this is a great restriction. Doesn't mean to say that big companies don't have good exploration teams. They do, but they're handcuffed from achieving what they're meant to be doing in the field. So here's a problem with the health and safety departments. Most of them, and in the big companies, it's the herd mentality, but they have no appreciation of what exploration actually is, because the people who are making the policies have never been out there, they've never done it, they have no experience. It becomes company-wide policy. We've got a HR department, we employ all these people, and everybody throughout the entire organisation, no matter what you're doing, has to comply with this. There's the herd mentality, as I mentioned. One major company implements a policy, another company will follow suit, regardless of how applicable it is. There's countless useless consultants involved in these health and safety manuals, again by people who've never done it, and of course we have to be politically correct. So the most dangerous thing a geologist can do is not get into a helicopter, not fall off a cliff. Statistically, what happens is that most geologists have accidents in vehicles. And how many times a day do we get into a vehicle? This has been my closest experience with health and safety 3 years ago in China. And so this had nothing to do with all the policy manuals that big companies have. I was just in the wrong place at the wrong time. Here's another example. This is one of Ivanhoe's exploration camps in northern China a few years ago. And basically the concept would be to go out for 2 or 3 weeks without necessarily having even good communications, because you're in a remote area. There was no requirement to phone in the morning and before you went to bed, because to do that you would have to drive 250 miles each way, and so that wouldn't be very productive. This is a photo of drilling the discovery outcrop at the 8 million ounce Matabi deposit. As a major company, try and get your health and safety department to sign off on a drilling contract for this. Good luck. It's really just common sense. In my opinion, at least the exploration manager, at the very least, should be involved in corporate health and safety policies, if not actually managing them. It's the experienced guys out there that have done it that know what's safe and what isn't, and it boils down to common sense. This was clearly stated by the chairman of Oz Minerals recently, and he was reiterating basically what I've just been saying about how it's become a hindrance. It's just volumes of paperwork, and people are no longer thinking or have the ability to go out and explore and make discoveries. Geopolitics is another problem, of course, and this is an ever-changing world for those companies that have been successful in the DRC. For example, Ivanhoe Mines on their Kamoa-Kakula discovery. A definitive agreement was signed in early 2000s, and now the government's changed the goalposts. So despite the fact that this is the world's greatest undeveloped copper deposit, it's facing serious challenges in actually making this a reality. Other examples would be the export ban on metals that have been imposed in Indonesia and Tanzania. Increased royalties. Even a safe jurisdiction like Australia is not necessarily the most economically attractive place to spend your exploration dollars. Technology, new frontiers, a few words about that. We've seen huge advances in technology over the last few decades. And of course, one of these is the drone. This probably will turn out to be one of the best friends for a field geologist, simply because it's going to make life easier in very isolated terrains. If we can put a TerraSpec and a Vanta on a drone and send it up to a very remote area, and with its little probe it brings you back a sample with an analysis of the alteration, the copper content of the sample, it could save several weeks of ploughing into an area in a remote area to actually collect the rocks, take them back to a lab and wait a month for an assay. So this, we're not there yet, but I think it's certainly out there in the near future. Drone-based geophysics, some of it is already happening. That too is going to be a reality in the near future as the technology gets better. And so this too will greatly assist future exploration. Core scan, we're all aware of the benefits of this, and certainly the talks this morning highly illustrated that. Now it's quite possible to actually have on-the-spot analyses as well as your core scan. So these are huge savings in time and money for the exploration business. Coil drilling, of course, that's now well known, and we're very close to being able to collect samples, accurate samples from down the hole using core drilling. So this too is another game changer. The lab at the rig, that of course will greatly assist budgets and time. And then there's all the downhole technologies that we can apply, geophysical technologies, etc., etc. Great stuff. Robotics is also very useful, and on mine sites, this is just an increasing trend. For example, here's a mine site where essentially everything that's happening underground is controlled from an office and computer screens in the admin. Drones in mining, surveying, etc., ore heap or reserve estimations, all very useful. Automation in the trucking industry in the iron ore mines in Australia is now a reality. 4 of the iron mines have 73 driverless trucks and also robotic rock drills. The same thing's happening with ore haulage systems for locomotives, trains. It's more efficient and it's quicker. All this is going to come with a consequence, because the more we go into this technology, and it's going to be vulnerable for cyber attack. And so there's going to be a requirement for large budgets to prevent cyber attacks on all of this automated technology. You can imagine if a hacker hacked into a mine site, perhaps say in the Carlin Trend, and reorganized the blasting pattern for underground. This is potentially extremely a big problem. So, new frontiers. This is a slide that Bruce Gamble actually showed recently, and it just highlights the requirement for now, as our technology advances, what elements can be used for what. And so in the energy sector, we've gone from very simplistic, a few elements, to now much more sophisticated requirements for multi-elements. Recycling, yes, this is incredibly important. It's not as simple as it sounds, because some elements are more recyclable than others. So, but it is definitely a future technology. Solution mining, of course, that's been around for a while. And now we're not far off the first development of submarine mining. And so if you look at the number of VMS deposits or metal deposits in a submarine environment, there's over 5,000 deposits around the world that are known, and many of these in the future could be mined economically, perhaps. This is some of the Nautilus technology. It's not there yet, but I believe it's within a few years away. And so at some point in the future, we'll be deriving metals from the seabed. Now, if we really want to take a leap, we go into asteroids. Now, this may sound totally crazy. Perhaps it is. But if you think about it, it's almost 50 years to the year when man first landed on the moon. So in the last 50 years, there's been a lot of effort, and in the last decade, there's been a lot of funding. It's hundreds of millions of dollars that's going into R&D for potential asteroid resources. They contain huge individual values. It's billions in some of them. And asteroids are being recognized almost on a daily basis. And there's, out of the 8,500 that are presently known, more than 1,500 of these are closer to Earth than the moon. This isn't going to happen in my lifetime, but perhaps in the decades to come, it will be an important part of the resources sector. So here's the field geologist in 2015. There may be a number of these employed. Hopefully there's still a requirement for people who understand rocks, understand ore deposits, and are still using these tools. It's critical that no matter how much we advance in terms of artificial intelligence, all of these great programs, sophisticated exploration matrices, etc., there's still a fundamental requirement for people involved, or at least a group of people involved, who understand ore deposit genesis and geology and have actually been out there and done it. Thank you very much.